Plenary Session 4 on the last day of this conference. Digital financial services seem to offer an important opportunity to both deepen and broaden financial inclusion by using technology to reduce costs, increase efficiency, and better tailor products and services to meet real needs. This session, ladies and gentlemen, will examine the role of technology and digital transformation in realizing the vision for digital financial account ownership, account usage, gender gap, and mobile phone ownership in India. The session will focus on what is currently happening and some learning from global breakthroughs in inclusion for all. Can the digital transformation of financial institutions really reduce their costs and make them more inclusive? Given the limited smartphone ownership and not all of them being used for financial service in India, what role can fintech play in deepening and broadening financial inclusion? These are some of the indicative questions the panel will discuss. Is our top table clear? It's done? So, ladies and gentlemen, let's give a warm round of applause as I invite our moderator of the session onto the stage, Mr. Graham Wright, founder and group managing director of MSC. Let's give him a round of applause, please. Our speakers are Hilary Miller-Wise, Deputy Director, Digital Financial Services, Gates Foundation; Ian Browgham, Vice President, Digital Transformation, ASEAN; Aranjoy Dhar, Senior Director, Microfinance, BRAC; Rupali Kathuria, Manager, Social Impact, South Asia Center for Inclusive Growth, MasterCard. Our moderator is Mr. Anil Kumar Gupta from MSc. I beg your pardon, sir. Our apologies. Let's give him a warm round of applause. Mr. Anil Kumar Gupta. The session duration, ladies and gentlemen, is for 1 hour, and we're really coming to the close of the second day. So we'd like to have this session interactive with lots of enthusiasm and enjoyment as we come to the close of this conference. Over to you, sir.
Hi, everyone. Good afternoon. I see a lot of empty chairs, and I think that clearly tells that we are about to close in some time. Nevertheless, this is a plenary session, and I have a pleasure of having such a very interesting panel. And one thing which we like to do differently in this panel is that last 2 days we have spoken a lot about what's really happening in India, and probably we are trying to learn from that. In this session, we have experts from the different part of the world, and we will try to learn and better understand that what is that we can learn from them. There are so many good experiments, so many good learning that we have in different parts of the world. Probably this is the time for us to take a step back and see, can we learn, can we improve on what we are already doing. So before I start, I would like to invite all my panelists to speak for a minute or two to tell who they are and the role that their organization is playing or aspire to play in the space of digital financial inclusion. So can I start with Hilary?
Thank you. So I'll be very quick. I was already introduced, Hilary Miller-Wise, Deputy Director at the Bill and Melinda Gates Foundation. Our role is really to incentivize innovation, to support players who are really driving financial inclusion, and particularly closing the gender gap in financial inclusion. So we're behind them and supporting them in a variety of ways.
Hello, everyone. My name is Ian Braum. I am leading our digital transformation advisory programs at Axion. For those of you who aren't familiar with Axion, we're an international non-profit which is focused on driving financial inclusion through 3 core strategies. We invest in institutions that have the capacity to drive financial inclusion at the MSME level. We provide advisory services to institutions to digitize their operations and allow them to provide digitally enabled products and services to the customers they serve. And we influence through the research and the insights which are driven through our independent think tank, the Center for Financial Inclusion. Thank you.
Hi, this is Arinjoy Dhar. I'm the Senior Director for BRAC Microfinance. So BRAC Microfinance is part of BRAC, and a lot of you already know BRAC, but just a small intro. So BRAC is the largest NGO in the world and coming from the Southern Hemisphere. And we do a lot of things in addition to the microfinance. That includes health, that includes education. We run about 10,000 schools. We do have the largest legal help system for our people. And also we run climate change and a lot of other programs. So basically, through all these things, BRAC believes in an integrated development program where finance becomes an integral part of it. But then when we do not look at the other things like education, legal help, and also the health programs and education of our children of our beneficiaries, that the whole development actually do not have a meaningful outcome. So that's why we look at the whole program in a total picture and then try to get things done for our beneficiaries. Thank you.
Hi, I'm Rupali Kathuria, and I'm from MasterCard Center for Inclusive Growth. At Center for Inclusive Growth, basically, we work towards creating sustainable growth and financial inclusion across the world for the underserved sections of the society. So specifically in India, we're working towards three areas which are driving revenue growth for micro and small entrepreneurs, accelerating profitability of the farmers, and supporting women entrepreneurs and helping them build financial resilience. So we have various initiatives under all three pillars, and we have working with a lot of partners. Axion is one of them, where we work with various partners to support these three pillars.
Yeah, so thank you all for introducing yourself and about your organization. I think the hypothesis here is that digital financial inclusion can deepen and broaden the financial inclusion. This is the topic that we are going to talk about. So before we talk about that, I just want to put out a framework in the sense like when you look at functional framework of technology, like what is that it should be doing. So I look at four parts. First part is all about savings and investment, and this necessarily means that you should have account. So a lot of work which has happened across the world. So for example, in India, we have Aadhaar, which is the foundational ID, which allows you to open the account and then people can put in money into that account. In Bangladesh, we have national ID, and this national ID has been repurposed so that you can do your KYC for opening the account. The second part of the functional stack is what we typically call is spend or payment. There's a plethora of innovations happening across the world around payments. Of course, there are a lot of work that we still need to do around the use cases of those payment services. And of course, in India, UPI is a classic example. In Brazil, we have another very interesting example by way of PIX. The third part of this functional thing is lend or the credit. This is where I think a lot of bankers or a lot of financial services provider would like to go. Some work which has happened, some island of success, but still I would say there is a long way to go. And we have to see that how do we reduce the cost and still reach the scale. So that's the third part of it. Fourth part is how I will put it more like a protect. So wherein we are talking about insurance or the pension type of schemes, wherein can we sachetize them, can we use the technology to advance that. So these are the four actually large bucket in terms of financial inclusion. And I know that Arinzo would still go beyond that and when he talks about the integrated development. So what we see globally is that there is a very promising trend, which yesterday morning while Sania was talking about, she said that number of account ownership has really increased from 51% to 76%, and this is very encouraging. But this is the only thing which we could really move so far by now. Similarly, we see that mobile money accounts, it has helped a large part of the world, including sub-Saharan Africa, where in 33% of the people, they are able to access their accounts. And of course, a lot of these things have happened because there are technology development, and this is the reason why we see enormous growth in terms of account, and to certain extent usage of that account. What we also see is that 30%, 36% of the adults, they receive payment into account. And if you look at this 36% as a total number, 83% of them, they are able to make digital payments. Similarly, if I'm coming back to India, there is a tremendous success that we have seen thanks to Prime Minister Jan Dhan Yojana, or PMJDY. As we speak, we have around 480 million account. They have something like $23 billion of balance, with the average balance of $48. So it's tremendous. It's a tremendous progress, I would say. But still, barriers exist. There are plenty of barriers that we see. And despite so many accounts that we have in India, still 20 odd percent of people in India are unbanked. In Bangladesh, it is around 47%, and in Indonesia, it is around 48%. As per the last Findex reports, of course, things are moving on year-to-year basis. If we just go down a little bit lower, we realize that account ownership rates, they remain lower for low and moderate income people, women, and young adults. And our research, a lot of research that we do in the market, in multiple markets, we realize that there are evidences that say women lack the skill and confidence when using their accounts, and they face challenges when accessing the nearest financial institution. There is a little bit of paradox here. What we also see in some of our research in India, that you have the access point near to people, say something like a business correspondent, but people don't trust them, people don't use them. So they continue to go to bank branches, though they are little far and they are not very convenient for them. So with that, actually, I come to my first question for Larry. That see, like you have seen some of our reports, and our reports suggest that 30% of women in India, they are proxy users. So it means that like there is someone else who is using those type of account, and they have to depend on male members to operate the account. Uh, what would you do to address the gaps in financial inclusion? And I would like you to draw experience and learning based on your other work, which foundation has been doing, or you yourself are personally involved in.
Great, thank you. So I'll reference some of the research that the Gates Foundation has supported in Africa, mainly in 3 countries for this data, in Kenya, Cote d'Ivoire, and in the DRC. And there are a few things that we found, and one thing that we often say is women is not a segment. When we're talking about half the population, that is not a segment. And so I hesitate a little bit from speaking generally about what women want, because even within a market, you're going to find a lot of variability on things like their comfort level with digital financial services, or what they want from a Kiko agent, et cetera. So, but let me speak about these 3 cases and some of the findings that we had. The first one was around transparency of costs. Even in a place like Kenya, where digital financial services and mobile money is quite sophisticated, there were customers who still didn't understand, women customers who still didn't understand what the fees were. And they felt that either there were hidden costs, in their words, or that they were losing money. And they weren't losing money, it was just the fee that was being taken out. So even in a market like that, we have more work to do. The second is, I think many of us would agree that that having more women agents can be beneficial, and there is some good data that does show that women do prefer to work with a female agent. The research that we did in Cote d'Ivoire showed that women preferred, there was a 7.5 point gap between men and women on the gender of the agent that they preferred. And what was interesting, even more interesting, is that women actually transacted higher volumes, higher values with women agents. And even beyond that, many of the women customers would seek out women agents, so they would travel a farther distance to find a woman agent when they had larger amounts to transact, just because they felt more comfortable and they felt they could trust it. At the same time, when we talk about transparency, there were some interesting findings around notifications. Women wanted notifications, they preferred the notifications. And if there was a delay in the notification, that obviously would make them trust the system less. In Kenya, what was interesting is that women wanted more control over the notifications that they got because they were worried about their husbands seeing that information. And there's actually an interesting, this was not something that Gates Foundation was involved in, but there's a fintech in South Africa that had developed technology to enable, you could enter a short code and that would signal to the fintech that someone was maybe asking you for your balance information, and you didn't want to share it with them. And unfortunately, in a market like South Africa, there is a lot of crime, and you would have people who would know that you had money on your account and want you to transfer it. But women started using it so that they could have more control over the communication in the household around the money that they had in the wallet. So these types of operational issues are really critical. I do want to point out, though, and there was a point that was raised in an earlier session around the burden that sometimes we're placing on the agents. So these is what I would call assisted transactions, which is what I think you're referring to. That research that we did, and I just actually want to quote this agent. The agent felt like it was putting too much burden on the agent to actually help the women customers. And what he said, it was a man, and what he said is, it's not my job to do more than I've been trained to do. I was shown how to do transactions, how to welcome clients, and how to avoid risks and mistakes. I do advise clients, but I earn very little, and it exhausts me and brings me nothing. And so on the other side, I do think we have to think about what is the burden that we are creating on those agent networks, right? On those agents themselves. And is there a way that we can solve for some of these issues that have knock-on effects, right? So still continue to support women, but do it in such a way that it doesn't create negative externalities elsewhere in the supply chain. The last thing I would just want to point out, and this is something that in India you no longer really have as much of an issue, but is the point around IDs. Outside of India, I think broadly the numbers are that women, it's something like 44% of women don't have an ID, where something like 28% of men. And we are doing a lot of work to support access to and the development of ID systems and payment systems, much like Aadhaar and UPI and other markets, but we have a long way to go. And what we're seeing in those studies is that in many cases, women will register under someone else's name in order to do the transaction because it's easier to get the documentation from a husband or a brother, et cetera. And so they're solving for the issues that they have, but of course, ultimately, we're not getting visibility into their transactions. So, I do see a lot of promise and a lot of potential, but I think we have to think about women as broader, more segmented categories to look at things like how do they interact with the Kiko agents and what do they want from the whole experience end to end. Thanks.
Thanks, Hilary. In fact, you pointed to a very interesting data that is like how many women have IDs or how many women don't have IDs. Because this becomes the first point to enter into the formal financial system. If you don't have this basic thing, then anything that you want to do on the digital side, I think it's very, very difficult to really do it. So yeah, thanks for bringing this up. So let me move to Ian. So you know that we have something like say 700 to 800 million smartphones in India, and we believe that not all of them are unique. Like if you look at this tele density in India, they would like to say there are more than a billion SIM. But for example, in my phone, I have used two SIMs. So if there are more people like me, it automatically means only 500 million people are included. So I apply as some kind of a guesstimate on that, and I see that probably 40% of them, 40% of Indians are unique users in terms of smartphone. And since like if most of the fintechs, those who want to work with this with any customer segment, they prefer to have a device, and that device happens to be a smartphone. So considering all these challenges or all these things that we see, say Indian market, uh, what do you see that role that fintechs can play in deepening and broadening financial inclusion? Because this is something which is, I think, probably bothering most of the people, that how do you really go beyond that?
Yep, absolutely. I think it's a great question, and I think that the role that fintech is going to play is a collaborative one. I don't think that the lack of digitization at the merchant level necessarily means that it's not possible to serve those merchants with inclusive finance, which is digitally enabled. What I think it does mean is that the role that those fintechs are going to play is more of an enabler to the types of institutions who already have a physical touch with those merchants, rather than as a standalone proposition where they're serving those micro merchants directly and owning that customer relationship. And we see examples of this from different markets. You can take supply chain finance, for example, and we see supply chain finance models in India, we see supply chain finance models in Africa, and the approach that some of them are taking is slightly different in the sense that they'll go into a market and rather than aim to digitize the MSMEs directly, particularly in instances where there's a lack of smartphone penetration, they'll focus on trying to digitize those organizations that have that physical touch. So one example would be identifying an FMCG distributor and looking to digitize the sales and inventory information that they get when they're visiting merchant locations and they're taking inventory stock orders. What this means is that they're then able to get access to digitized inventory of those micro merchants without necessarily asking them to change their behavior in any kind of significant or relatively significant way. The effect of that is that, excuse me, sorry. The effect of that is that they're able to achieve an awful lot from an ecosystem of players. Thank you. They can achieve an awful lot from an ecosystem of players through that collaboration, and it can be incredibly impactful. The challenge with that model is it requires you to bring together a lot of different players and to make them all work from the same hymn sheet. I mean, even in these supply chain finance examples, you have an FMCG distributor. In some cases, you'll have an FMCG. You have a financial institution that's extending the credit, and you've got a fintech which is stitching everybody together with technology. And they've all got to come together. They've got to agree operations. They've got to agree commercials and goodness knows what else. And that is very, very difficult. And it's something that we've seen is very difficult. And in fact, within Axion, a big focus of ours at the moment is to really understand what are those inclusive models of where you're bringing together a number of ecosystem players to collaborate. What do they need to look like, and what are the elements that need to be within them in order to make them successful?
Thanks, Ian. I think like if I were to say that, probably two things which you said very clearly. One is that what we classically call phygital model, which is a combination of physical and digital, and second is all about adjacencies. So how do you exploit the adjacencies to make sure that digital works actually in those areas? So quickly moving to Arinjo. So Arinjo, probably you heard him that he comes from the BRAC NGO, and I think they take a very different approach to the inclusion. This is more about integrated development. So I think we would like to hear more, Arunjay, from you, that what do you mean by integrated development, and how does it fit in within the overall inclusive finance agenda?
Thank you. So this is a very interesting topic because Bragg from the beginning believed in a theory that the theory of change is basically if we want to make a change, we have to look at the overall situation of a person. So as we know, poverty is very complex and has it's multifaceted. So one solution does not solve the problem. So just to give an example, so when we hear about climate change, the southern part of Bangladesh, if you ever go there, that's the real story of climate change. If you go there, thousands of acres of land are barren. People have no livelihood because they used to do fishing and agriculture, so it's all gone now. Uh, Cyclones are hitting like every month. Before it used to be like once in a year. So basically, they practically have nothing, right? So now, if I go and do microfinance there, it doesn't mean anything for them, right? Having money has no sense for them unless I create livelihood for them. So in that area, we did a pilot last year. So what we did was the land has become so saline because of the water is coming in repeatedly from the sea. So you cannot do the paddy or any rice cultivation like before. So we brought a particular seed of a crop, which is a mustard, which is actually saline tolerant, and it can actually grow there. So we organized a group of women there, and the first time farmer. We gave them the mustard seed, we gave them the expertise, we taught them how to do that, and people actually laughed at them because they're the women, they've never done farming before. For the first time, they're doing farming. And people did not believe that the mustard can actually grow there. But actually, 4 months, 5 months later, when we went there, it's a striking kind of scene that thousands of acres of land are barren, and 3 acres of land where we did the cultivation is green, right? So that's the hope they have now. So they have a product to sell now. They have the mustard, which is growing up. People are coming to buy from them. Now, if we go and do microfinance, it will work. Similarly, we have done fish farming there. So we found out fish which can grow there. And we have done the water treatment plant. We have done the water purification and so on. And then with the pilot project, we have proven to them that this can work. And then we are doing microfinance, right? So take the example of the farmers. So when we do, 30% of our portfolio is actually farmers in Bangladesh in BRAC microfinance. So you have like 8.5 million clients. Out of the 30% are farmers. So basically what we have done is we look into not only like financing them, but we also look into like where to get the seed from, the quality of the seed, the quality of the fertilizer, and also linking them with the market and ensure that they have a fair price. We also have started a insurance policy, crop insurance, crop insurance in Bangladesh. We are now piloting with 10,000 farmers. We're going to scale it up to 100,000 farmers this year, and in the next 3 years, we have a plan to scale it up to 1 million farmers. Excuse me. So basically, the insurance works like this. So during the harvesting time, if the crop is damaged because of the excessive rainfall or excessive heat waves, or there is a less yield. So let's say the farmer got 1 acre of land, he got 100 kilos of potato in the last 10 years, but this year he got 90 kilo. So that insurance policy will pay the shortfall of the 10 kilo, right? Or if there is excessive rainfall, if the crop is damaged, we'll pay for it. So that way, we are not only microfinancing the farmer, but also we are helping him or her with the quality of seed, quality of quality of the fertilizer, and the money. And during the harvesting time, the crop is protected by insurance. And towards the end, when the crop is coming out, like he's getting the harvest, we are actually linking him with the market. So we are looking at the entire value chain to give him an end-to-end solution, right? So currently, the third example is currently we are working with, you must have heard of Sundarbans, the largest mangrove, right? So Sundarbans, we have almost 1.5 million fishermen, who are all kind of extracting the most expensive, resources from the nature, like the honey, the fishes, various expensive sea fishes. But then if you look at the price they get, it's nothing, right? So for example, the middleman makes the money, and they get literally nothing. For the best quality honey, they get literally $3, 1 kilo. And we pay for the same kind of honey, we pay $25 at least. So there's a massive gap of 8 times. So we are now working with them to see what proposition we can build to kind of give them a microfinance, also to do the fair price. So for that reason, BRAC has a retail sales outlet, which is called Arong. And that's exactly what we do to do the market linkage of the artisans and any kind of other products to bring to the Arong shop, sell it directly, give them a fair price. And we are also opening 6 stores in India this year for Arong. So basically, these are the 3 examples I'm giving, whereby we look at things from an integrated development point of view. Just the money does not solve the problem, but we need to look at the entire value chain, entire solution, and help them and to connect them with the market. Not necessarily we have to solve all the problems. There are people who are solving the problems, and we can connect them with, we can just connect the dots and solve a lot of these problems.
Thanks, Arun. I think this is a very interesting twist to the finance. What I would prefer to say, it's more like a sustainable finance, in the sense if your clients are healthy, your organization will also be healthy eventually, and it requires a lot of backward and forward linkages, whether it's supply of input or probably connecting them with the market. I think, and I think probably this is one of the conversations that we have been having in India. And if you see the National Financial Inclusion Strategy document, which has come out from Central Bank in India last couple of years back, it talks about livelihood now. So it wasn't there actually earlier as part of the financial inclusion agenda. Okay, thanks for that. Moving to Rupali. So Rupali, you have seen like last 2, 3, 4 years, we have been like flourishing, and then there was a COVID, and a lot of things actually happened. A lot of things were pushed back, and it has serious impact on particularly on small enterprises. So you do a lot of like your organization has been supporting a lot of work around the small enterprises. So we are still recovering from the shocks of COVID. So we would like to know more from you that what do we need to do to recover from the COVID, more so in the context of small enterprises, and if you want to layer it with women-owned enterprises, that would be fantastic.
I think the first and the foremost solution which everybody has been speaking about, and it's written very popularly now, is digitization or digital transformation of the small businesses that can actually help them recover and also build resilience to overcome any of it, future shocks. So yeah, at Center for Inclusive Growth, we work very closely with the small business our partners and entrepreneurs, help them digitize. And I think we all know that digitization basically can help small business entrepreneurs, cover three things and actually enable small business entrepreneurs do three things through digitization. First being that they can actually connect to wider markets, they can reach out to newer customers, and also it opens up new channels for them to sell online. The second being it improves the access to capital, and as my fellow panelists just spoke about that, access to capital, we all know that it's one of the major challenges that the small businesses have been struggling with for many years now. Third being, it improves the business efficiency, because small businesses can actually, focus more on the core of the business rather than, things like accounting and bookkeeping, for which now they can use a lot of digital tools which are available in the market now. I think all of these things are very well known now, but something which I would really like to share over here is, and I think SMEs also recognize today that digitization is imperative and very pivotal to their growth. However, I think what we are realizing in the market is, and through our on ground work, is that while they digitize, but there is, they've not been able to sustain, or the ecosystem is not helping them sustain to be digitized and actually reap the benefits of digitization. So few things which are really important in terms of helping them continue using digital tools. One being that there has to be some tailored training, uh, and tools should be available for small businesses, because given our country is so diverse, and I'm talking about India over here, that our country is so diverse, every business has a unique need, and the tools which are available in the market today are very generic. So there is a need to build, customized tools for these small businesses. Also, keeping in mind, as you mentioned, that focusing a little bit on the gender angle over here, women are using digital tools in a very different manner in comparison to men. So there is a need that there is a requirement for women, especially that if in case, I have to give you an example of one of our initiatives where we work with women entrepreneurs. They require a little bit more hand holding as compared to men. While they're more experimentative, they're more open to using new different tools, but they need a little bit more of hand holding and support as compared to men. Similarly, the cultures are different. If you move from one city to another, there is a major change in the cultures. The nature of business is different, so there is definitely a need to create tools which actually meet their unique needs. The second bit is, as I said, that they require more of hand holding, so that training is required. So there is a need that companies and organizations like ours should come together so that we can help these SMEs get trained to use these digital tools. And I think the last bit is that the entire ecosystem needs to come together to support the cause of digitization. Otherwise, what we are seeing today is that people who digitized in 2020 have stopped using the digital tools. So just to ensure that they keep using these digital tools and get the benefit out of it, everybody needs to come together so that we are able to help them sustain in this digital economy.
Thanks, Rupali. Any example for that? Like how can ecosystem partners they can come together to sustain this digital journey which started say in 2020?
Sure. So, see let me give you an example of what we are doing. So, and I think like we're working with Axion, we're working with BRAC, we're working with Access Development Services. We're also working with a lot of, state governments across the country. So, I think everybody needs to come together to see that how we can benefit the beneficiary, the small businesses, and especially businesses who are actually micro and small, because the small and medium have at least reached a level that they can train themselves, but the micro ones are really, like, if you see a kirana store owner would require certain amount of either the kind of digital tools the kirana owner would require, or a women entrepreneur who's running a kirana or would require, is very different. So I think we need to understand that what is the need, and then bring in the partners who are expert in that area, so that all of us can brainstorm together and then take the solution to these beneficiaries. Otherwise, I think they would be left behind. That is what at least we've been observing on ground.
Thanks, Rupali. I think these are very insightful comments. In fact, what we also see that if you see that how accounts are getting uses and what's really happening is that generally the most common usage is all about receiving the payment or making the payment. So that is where I think most of the accounts are getting used. Probably the next use case is all about that using it for saving and credit. Of course, credit is very important in the lives of people where there is a high income volatility in their lives. If you really look at that, how people are using their accounts and how many are really able to use it on their own, I think data is not really encouraging. So I'll not go into much of the data because this is something that we have discussed since yesterday. Only things one which stand out is that only 11% of adults in India and 2% of adults in India made a digital in-store merchant payments in 2021. So this is of course I'm hoping that this number has gone up tremendously in last 1 or 2 years, but probably there is a really long way to go. And of course there is a huge digital push, and there is I would say there are a lot of organizations which are working in this space. For example, in India there are a couple of organizations, phone Google Pay, they are trying to make sure that people are able to use this for different type of payments, but this still continues to be one single large use case. In terms of credit, if we see, there is a huge gap actually. It's not only about India, that globally we see that like people estimate that digital credit will rise to something like 890 billion in next couple of years. But if you look at the gap is in trillions of dollars. So gap is something like 4.9 trillion dollar. This is what they are quoting, the numbers are quoting. They are island of success in the sense like there are places where good things are happening. For example, in Tanzania and Kenya, half of the people they are able to borrow using digital channels. And of course it's not that everything is responsible, everything is productive. So I think Hillary is, I think I know that she's smiling, that there are so many challenges all around that. Only thing is that how do we use those type of things to get into small enterprises. But at the same time I see very interesting experiment or experiment happening in Indian market, which is what we are calling it credit democratization using account aggregator and open credit enablement network. So basically, people are trying to use the financial data which are lying for a particular person at different places, collect it and try to create something out of it and then offer them credit. So there is one experiment which is live actually on in India. It's little early to say that how far it will reach, whether it can become a kind of a aha moment like what we have UPI in India. But I think time is going to tell, because it's not easy that it's not as easy as payment. In case of payment, money moves from account to account. You have money, then only you can move. But in case of lending, money moves from the lender to the borrower account, and that you need to recover. So I think there is a bit of challenge. If people are not very comfortable lending, they are not going to lend. So Rupali, probably I'll come back again to you because you spoke about digital tools and all other things. Probably you want to talk more about that. What is the digital transformation that financial service providers they need to do? Because you talked about the ecosystem. So ecosystem includes like for for the purpose of lending, the biggest ecosystem player is your financial services provider. Can they really go onto the journey of digital transformation and really help uh, this segment?
Yeah, absolutely. And I think, as you rightly said, that this is something which is already happening as we speak. And, we are seeing, especially, the smaller FSPs, they are more agile and ready to experiment and ready to move online. And I think the biggest advantage if FSPs move online is that, they can see the digitized small businesses who are online. And also, this will help, addressing the major challenge which SMEs face today, which is of access to capital. And once the MSCs are, the SMEs are digitized, and they are also, they build their digital or track record, digital footprint, then the digitized FSPs can also, see them online, and they can track this data and use this data as an alternate to collateral, that which actually today a lot of these MSCs are do not have at this point in time, and especially women in the country who do not have, any property in their name, so they can't declare any collateral. So I think if they have like a digital footprint, then FSPs can easily, or the banks can easily lend to these MSAs. And I think, as simple as that, in our partnership with Axion, we're working with Annapurna Finance, just to give you an example, and we have built like a emergency loan solution with them, which is like SMS emergency loan solution. So, and that can be availed through a feature phone. So it doesn't have to be on a smartphone, or the SME doesn't have to go to the bank or an FSP, but actually, through a feature phone, connect with the FSPs and get the loan granted. So it's very important that, while we are building tech solutions, it's important that these tech solutions have to be very simple, which can be actually adopted by smaller FSPs and also smaller MSAs. I think that's something which is the scope which is open at this point in time in the country.
Thanks, Rupali. I think you are showing a ray of hope even for the feature phone users, which is becoming more and more important, particularly from the inclusion perspective. So thanks for that. Coming to Ian, uh, you have been working with multiple MFIs in India and outside, and probably a lot of your focus is all about digitally transforming them. So what are the lessons that you want to share with the audience, and what is that we can learn from them?
Yeah, I think that's a really big question. I mean, as Rupali mentioned, we've been working together to digitally transform 9 different institutions across the globe over the past 4 years. And there's an enormous amount of learnings which are coming out of that. I mean, I think if I had to pick two of the most important ones, or two of the biggest ones, I think the first would probably be prepare to fail. And that's very different from aim to fail. It's make sure that you are prepared for things to go wrong, because digital transformation is incredibly complex, it's very expensive, and the likelihood is that at some point along the road, something is going to go wrong. And I would say that success is more determined by your ability to pivot and learn from failures than it is your ability to get everything right first time round. So that preparation is really important. And we don't just mean prepare your operations, we mean prepare your forecasting, prepare your budgeting, make sure you've got the provisions within your operating model to if something does go wrong, you can accommodate that, you can learn from that, you can implement changes based on what you've learned, but most importantly, provision for failure when you're managing internal stakeholders. I think this one is really, really important. You have to set that expectation internally, particularly to your board and your management team, that it isn't going to be a smooth ride, that there are things that are going to go wrong, but those things are going to be the learnings that eventually allow you to succeed. So that would be my first one, is prepare for failure. The second one, I think, would be that digital transformation isn't just about technology. So I think in our experiences over the past 4 years, we've seen that it's much more impactful from the perspective of driving usage among MSMEs to be changing the internal infrastructure of the institution rather than it's focusing solely on changing the customer experience. And what I mean by that is that the majority of institutions who are at the beginning of their transformation journey are not set up in a way that is conducive to being able to launch digital products and services. The way that the business is the organizational design, the structure, the way that the commercials work, the way that different levels of management are incentivized, they're just not set up to be able to launch something like a digital loan. And the moment that you drop a digital loan into an institution, there's an enormous amount of change which is required in order to allow them to operate that. So with that respect, I would say that when you're putting together your digital transformation journey, make sure that you take time to look at the different areas internally that those digital products and services are going to impact, and make sure that you invest the money and the resources to adapting your organization to being able to operate them. So huge question. I could probably go on for a long time, but I think my top two, my very top two, if I was going to have people focus on just two things, would be those for sure.
How easy or difficult it is to convince the management that probably this can fail? And what's the percentage of failure actually, if I were to?
I would say that maybe I won't go for the percentage of failure, but I would say that the percentage of organizations undertaking digital transformation that reach a point where they're looking out and they're saying, look, I don't know if this is going to work or not. We're at a make or break point. It's probably close to 100%. I think if you've seen a successful digital transformation and at some point they haven't had a moment of crisis, no matter how private it may have been, I think that would be a very, very high. In terms of convincing the management team, I think it varies. I think if you start from the beginning, and you're very clear about the investment required and what that investment provisions for and when you can expect to see returns, it's obviously a long-term return on investment when you're talking about digital transformation. I think you'll have an easier ride. I don't think it will be easy in all circumstances. Obviously, it depends on the composition of different board members and management teams, but it'll be easier. If you don't start with that narrative and then you bring it on at a later date, I think you've got a much more uphill battle. So I think, difficult to say how easy it is, but if we're talking about comparatively, starting from the beginning will certainly give you a leg up than not, and overselling the benefits and overselling the timelines of which you might be able to realize those.
I think the trick lies in the probably showing the reality that what possibly can happen, and probably how much time will it take, and what's the cost, and probably that I think that's easier thing to say than actually doing it while you are sitting with your management. Okay, thanks for that. So moving to you, Arinja, in fact, BRAC has been at the forefront of digital digitizing their transition, and I think there are important lessons from your Bangladesh operations. So would you like to share some of those lessons with the audience here?
Sure. So when we started our digital transformation journey, we looked at three principles. The first one was how it is going to help us internally to kind of reduce our cost, make us more operationally efficient. Because we have 3,000, close to 3,000 branches. We disburse about 30 million US dollars a day, and we also collect the same amount of money every day. So for us, the transaction cost is huge, massive, right? So even if we can improve like by 10%, that is a lot of savings. So that is number one. Number two was how it's going to help our customers in terms of customer experience, right? How it's going to make their life better, faster, less time consuming. And the third question we asked ourselves is how it's going to help our customers to have a livelihood through digital journeys. How we can do, what we can do to make it happen, right? So coming back to the first one, so we looked into our branch network and we said that fine, like who is ready for what? Because we have different segmentation of clients. So we have the SME, micro SME segment. We have, similar to bank, we have a retail segment where we have 100% women, about 7.5 million. So when we looked into their digital readiness, because even if I come up with a solution, if they're not ready for it, it's not going to work, right? So digital readiness comes to us first. So digital readiness wise, we have seen that about 20% of our clients from that segment was actually digitally ready in terms of smartphone ownership and also internet penetration. Because in Southeast Asia, it's not only the smartphone, but also the internet connectivity. Also, we have a massive gender gap there. So basically, so we designed an app for them who are digitally ready and those who has a smartphone. People who do not have a smartphone, 80% of that segment, we designed a USSD solution for them. And also people who do not have a smartphone but feature phone, they can also use other wallets. So like India, we have Paytm. In Bangladesh, we have Bikash, which is also a part of the BRAC family. So you have 60 million users in that platform, in that wallet. So we looked into their platform as well to see like how many of our customers are sitting there so that we build the connectivity between Bikash and us. So today, like one client can come to Bikash and pay back us through the Bikash platform as well. Similarly, there are other platforms. So we are actually like building that, coming back to Rupali's point, that building that ecosystem, partnership with other platforms, other banks. So people who have bank, so we looked into the other group of people who are micro SME, and most of them have bank accounts because they're SMEs and they deal with banks. So we actually started disbursing loan to them through banks and also collect the money from the bank on a monthly basis, right? So that's how we are kind of digitizing the payments for those segments. So digital readiness is a key thing. I think looking into the customer segmentation and see who is ready for what and designing a solution for that. So you're designing, at least 7, 8, 10 different solutions. Like a you can call it like a supermarket, right? So you can go and choose what you want based on your readiness. So that is number one. And that is working very well. So we're not pushing people that you don't have a smartphone, you must have a smartphone, right? So smartphone doesn't work. You need to give them solution what they really going to use. And I think the most important thing is what we have seen is like when it connects to the livelihood. That is the third principle that I talked about. When people start making money using a digital solution, they automatically start using a digital solution and they automatically go and buy a smartphone. So that's the critical enabler, right? So livelihood is, that's why it's so important, because we have converted a couple of our branches as an experiment, as an experiment to see if we connect them with a livelihood and then encourage them to have a e-wallet, then what happens? And 100% women instantly transformed, and they started using because they were receiving money. So when they receive money, you even do not need to teach them how to use a smartphone, how to use a wallet. They learn it very fast, right? So that's why livelihoods is so important. So we are now building a digital kind of ecosystem whereby you can call it like a social Amazon type of e-commerce, which will be mainly for the women in the villages who have something to offer, but they do not sell it to somebody who can give them a fair price. And if we have something like that, that will be remarkable. Then actually will give them the power in the hand of these women, right? So this is an example of a digital intervention which can help them money. And when you connect your digital wallet to that platform, you don't need to tell people to use that platform or use that wallet. They'll definitely use it, right? And the second thing is we have seen like what makes our clients' life easier, faster, better. So that way, like if you look at before, one client used to come to our branch to deposit money, you know, traveling from a remote village for 1 hour, going back in another 1 hour, so spending at least 2, 3 hours, right? So now when we have started disbursing to the wallet directly or to the bank account, it saves them 3 hours, right? When not only the timing, but like people who are coming from that community or that particular segment, for them the traveling expense also matters, right? So they're sometimes spending like 200 rupees back and forth just to deposit 100 rupees, right? And that did not make any sense. So when you let them use the digital platform and connect with the different wallets and through bank accounts and let them pay through that and through agent banking as well. So we open like multiple platforms for them, multiple entry points, so they can choose wherever they want to go, and then the cost is minimized. They automatically start using. So these are the lessons we have learned, that it has to be cheap, affordable, and not only cheap, affordable, accessible, and also connected with the livelihood.
Thanks, Arinja. You spoke about multiple segments, multiple solutions. I think it reminds me of what Hilary said in the beginning, that women is not one segment. So I think that you're using it in your practice. One quick question is that like you have a decent smartphone owner population in Bangladesh, and many of them they are your client. Do they still use a digital journey on the smartphone, or probably many of them they're still not comfortable in smartphone?
See, I mean, the smartphone ownership in Bangladesh is about 41%, but there is a gender gap of 29%, right? And we serve most of our clients are women, 90%. So that way we have, I think, 16, 17% of our clients that actually they have a smartphone ownership. But then when you look into the smartphone ownership percentage versus the digital users, it's pretty much the same. So people who have smartphone in our segmentation, I think all of them are using smartphone for transacting with us.
Oh, this is very interesting. Probably this is something that we are yet to see actually in India. So our best estimate is that probably 50% of the smartphone users in India they are using it for digital payments. So very very interesting actually. Probably we'll have to know that what's the secret sauce behind that. Okay, so going to Hilary. So, like, I think it's a little loaded and difficult question. In the sense, there is a data point. Actually, I was reading something today, and I realized that in India, lenders are spending $7 billion annually on collection of money, right? And that's the reason we are seeing few startups which are known as collect tech startup. So there are two names which have come up. One is known as Pocto, second is Cred Genesis. So something of these type of startups they have come in, and all the large banks, particularly private sector bank, HDFC, Axis, and ICIC, they are running after them to help them collect. So there is something which is like just a data point before you respond to my question. My question is that like all the organizations are going through digital transformation, but two parts to it: whether it is helping them reduce the cost, and second is can it make them more inclusive?
Yeah, so again, I'll bring some examples from Africa, which is what I know best. Thank you. So many of you would have heard of Equity Bank, very successful tier one commercial bank across Africa, started as a cooperative bank. They started their journey of digitization in around 2010. And they did it by, you've probably heard the expression, how do you eat an elephant? One bite at a time, right? They didn't try and do everything all at once. It was probably a good 7-8 years that they invested in digitization. But the results were extraordinary. So they cut their operational expenses in half. At the same time, their pre-tax profits increased 80%, with not a huge jump in the customer base. So their customer base stayed, was growing year over year, but at the same pace that it had been. What was also interesting is that the yield was reduced by about 8 points, which suggested that they were passing on, and we know this from looking at the interest rates, they were passing on some of that operational savings, cost savings, to the customers. So you could say that maybe Equity Bank is an aberration, but even if it is, there's a lot that we can learn there because it's an exemplar of the fact that digitization for them resulted not only in cost savings and increase in profitability, but also lower costs for the customers. So, one of the things that we do is try and look at some of the principles. We recognize you can't cut and paste that into other markets because there's so many factors that go into that. But what are some of the principles that we can use to support others to do the same thing? A counterexample that I'll give, and I can't use the name because I'm going to talk about a bad experience, is a bank in Uganda that was actually didn't digitize, was very delayed, while everyone around them, all their competitors were digitizing. And what happened for them is that they had very high operational ratios, expense ratios, about 30%. And even though their funding expense ratio was low, it was 5%, they had to make very expensive loans, right, to cover these costs. And what happened at the same time is because all the competitors had digitized and there were fintechs coming into the market, those lenders were just skimming the best customers off the top. And so this bank was left with the highest risk customers. So that is a scenario that we don't want. And I know the data is very mixed on the impact of digitizing in terms of lowering costs for the customer. But again, I would turn to an equity bank to say, what can we learn from them and how can we replicate that in other markets?
Thanks, Hilary. And in fact, maybe this is what you're suggesting, that this can reduce the cost in certain cases, if not in all. And probably if it is reducing the cost, some of them, they would like to pass it on to the customer, if not fully, part of it. So they are more profitable, but at the same time, little more inclusive. Thanks for that. Actually, before I start summarizing, I think I'll open it for the audience to have any question. I see some faces which probably are ready with few questions. Please go ahead, actually, if you have any question to the panelists. I think fatigue is kicking in. So one more chance in case you have any question. Okay. So I assume that there is no question. So probably let me start summarizing it and closing this panel. So I think we discussed a lot about what's really happening across the globe. There were many examples, many things that we discussed and learned. Few key things probably that we should look at it, that whenever we are looking at this entire, I would say entire uh, unserved or underserved segment, I think we shouldn't be talking about that this is one single monolithic segment. There are multiple segments in that. Second is that it's not that even if you look at the segments, you have to look at is that what is that we are talking about, whether we are talking about farmers, because farmers may have a different need. If there are small enterprises, they will have different need, and if there are gig workers, they will also have a different need. So we'll have to basically cater to those needs. Third is what we are also seeing, that we see that some of the smaller players, particularly from the supplier side, they may be more nimble, more agile as compared to the larger player. So just quoting one data from Central Bank in India. So in 2020, they disbursed something like 666 billion dollars, and of which only 2% was digital. So and this also speaks that large banks or large institutions, they are heavily biased towards a larger loan, and they find it really difficult to be as nimble or as active that which smaller organizations or so some of fintechs are possible. Fourth is, I think when we talk about fintechs, it's very important that what is the role that they can play. I think they can play the role at the intersection of what financial services provider can provide and what people really want. So it could be bridging that gap or enabling that this money can move on the digital rails. At the same time, they would also like to leverage the adjacencies or the existing rails or existing distribution rails to make sure that they are able to serve the people. Otherwise, I think it's going to be a very costly proposition. That is what we learned. Another very interesting thing which is coming from the experiments with the BRAC Bank is that we have to look at that finance is one part of it. You have to look at, can we look at it more integrated approach, wherein we make our clients resilient, which is the theme of this summit. And if they are resilient, indirectly it means that financial institutions, those who are lending to them, those who are working with them, they will become resilient. So with that, I will close this session, and thank you very much to all my panelists for sharing such an interesting insight from all the work that you have been doing. It is always amazing to hear what's really happening around the world. Though we can always talk about what's happening in India, but this is, I think we have to take it with a pinch of salt, that a lot of things, a lot of interesting things are happening around the globe. We need to learn, we need to be better over a period of time. With this note, I conclude the session. Thank you very much.
Thank you very much indeed, Mr. Anil Kumar Gupta, for wonderfully conducting and concluding the session. And thank you very much, our panelists on the top table, and for wonderfully, interacting with all of us and marking the session to a close. Well, with that, ladies and gentlemen, we close this session, and we would like to ask the moderator and the panelists as they step off the stage. We have a small token of our appreciation for all of you. We'd like to give them to you before you leave. A short group photograph, please. Thank you very much. Let's give them a warm round of applause, ladies and gentlemen. And now I have the privilege in inviting Ms. Radhika Agashi, the Executive Director of Access Development Services, to kindly propose a vote of thanks, please.
Well, good evening, ladies and gentlemen. With that, we come to an end of the 19th Inclusive Finance India Summit. At Axis, we were particularly overwhelmed with the response and participation from all quarters. This year, sponsors for supporting the summit, technical partnerships, companies wanting to put up stalls at the Knowledge Fair, and of course, the delegates from diverse set of organizations for participation, of course. At the end of the 2 days, it's my turn to, of course, thank a host of stakeholders, and people who have helped bring the summit together this year. I deeply appreciate the support of the principal partners, Bill and Melinda Gates Foundation and MasterCard, both partners for almost 10 years now. Thanks to also Pavan and Prabir from the Gates Foundation for engaging with us on session ideas and suggestions. And MetLife Foundation, which is back as principal partner after a gap of a few years. Core sponsors, SIDBI and NABARD, both Apex DFIs, have been long-standing supporters of Inclusive Finance India initiative, along with HSBC and IDFC First Bank. Co-sponsors, Credit Access Grameen, BRAC, and SBI. I would like to place on record our appreciation to HSBC for supporting us for almost a decade and a half on the Inclusive Finance India Awards initiative. Thanks to Knowledge Partners, Rabo Foundation, and UNCDF, and our special track partner, WWB, along with 11 technical partners who helped us work on various session themes. 11 associate sponsors, quite a few of which have come on board for the first time this year, but a lot of them have been partners for a long time as well. I would like to thank our inaugural panel, our inaugural chief guest, Shri S. Raman, CMD SIDBI, and all other inaugural guests for helping us kickstart the summit and with high-level context-setting addresses. We are grateful to the speakers from across India and outside who spoke in 23 sessions over the 2 days of the summit, and for sharing their views and perspectives on various themes and sub-themes. Special thanks to the moderators of all the panels for working hard to prepare with their fellow speakers on background and questions and helping us with instilling some rich insights from all the panelists. I should mention the work done by our comms partners, Small Town Brandits, Aage Se Right, PR agency Matt Chatter, and online streaming partner Dreamcast for supporting and backstopping the summit secretariat. We hope that the summit has been a useful platform for learning, sharing, and networking. We will send some post-summit feedback form, and I hope some of you will take the time to fill that up and send back to us. We thank you all for attending the summit. Your participation year after year encourages us to continue to put together the required energies in organizing a large event. Thanks to Kaveri, our MC, for her wonderful facilitation. Thanks to the new MEC team, our event managers, for their hard work for helping organize such a big event, and also to the Hotel Ashok team and management. I would like to appreciate hard work and efforts of the Summit Secretariat team, Shubhradeep, Jafreen, and all of the team that were pulled out from their regular work to help us in the last 2 days. Thank you very much. You have been the most wonderful team. Supported, of course, by the finance and admin team, led by Subir Ghosh. And a special word of appreciation to our oldest hand, Lalita Sridharan, who has anchored all 19 Access Summits organized till date. Thank you so much, Mr. Srinivasan, for your mentorship and technical guidance. We can turn to you anytime for help. And of course, thank you, Vipin, for your continued encouragement and your faith in the team. Thank you all, and we look forward to seeing you again soon. Thank you.
Thank you, Radhika. As usual, a wonderful summit that's come to its closure. And I must tell you, ladies and gentlemen, she's one of the most wonderful people to work with, and she really believes in making teamwork makes dreams work. Thank you once again, and I'm sure your vote of thanks has been seconded. Well, with that, ladies and gentlemen, we come to the end of this conference. I think some group photographs will be taken, but before you leave, do carry your personal belongings with you, because we don't know what's going to happen to this hall once we leave it. Thank you very much once again, ladies and gentlemen, and namaskar.